And welcome into the program. This is your game plan for retirement, Northwestern Ohio's resource for a common sense approach to planning with your money, your investments for your financial and retirement future. As president and founder of McIntire Retirement Services, Chris McIntire here with us as always, talking about some of the specific tools that are available to us in the financial world and some of the protections that we can put in place for our money and our financial well-being, that of ourselves and our family, loved ones, and those that we care about on today's program, and why those tools are so valuable and important. Chris, we always appreciate the time and the guidance, the education that you provide here on the program. Going to be diving into some important topics on today's program, as always, specifically talking about the continued need in retirement for life insurance, the value of annuities, and the potential protections, almost invaluable protections for long-term care against the potential catastrophic expenses of medical expense and events into and throughout retirement.
Yep. Yeah, no problem there, Peter. You'll get through it here. And
thank you.
Yeah, we just dealt with a good dear friend of ours for many years. It was $10,000 a month. My mother spent 1 month in an assisted living facility in January, and that was $9,000. We had to private pay that. So looking forward to, talking with this on today's show, buddy.
Well, insurance is important, right? And I think during our lifetimes, we insure against events that we hope never happen, right? We have auto insurance. We hope we never get into a car accident. We have homeowners insurance. We hope to never have to use that. Life insurance, that's one that's more of, I guess, an inevitability eventually. But during our younger life, to pay off a mortgage, to protect a spouse, or to support children in case the worst case event happens. But there are some insurances, Chris, that we actually hope to use. And specifically, let's talk about the reason and the value of these protections into and throughout retirement on today's program. Remember, ladies and gentlemen, if you've got questions, concerns, if you would like to get your comprehensive plan put together, your game plan for retirement, looking at income, investments, taxes, healthcare, legacy, all of those in coordination, that is the written plan that Chris McIntire offers to put together for clients and those listening to the program who are interested in bettering their financial forecast and outlook. All you need to do to take advantage of that is pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, diving into the life insurance first and foremost, I think that on the day before we retire, we may assess our financial situation and say, I've got the largest amount of money I've ever had in my lifetime, hopefully. The kids are raised, they're up and out, the mortgage is almost paid off. Maybe I don't have the same need or any need at all for life insurance. Is there reason to reconsider that value of life insurance into and through retirement in your mind?
Peter, every time we talk about this, I go back to Tom Hegna, and his question is, how much life insurance would you like to have on the day you die? Nobody says zero.
As much as possible, right?
As much as you possibly could. And I sit here today in full disclosure with no children and $3 million of life insurance coverage. Some of it a long time ago, some of it more recent for specific uses to protect against a mortgage. So, life insurance solves a lot of different issues, and so, for example, Peter, I have a life insurance policy that, I kind of bought to match up with our mortgage, that we built when we built our house in 2018. That's a term policy. Okay. It was a 20-year term insurance policy that pays $600,000 if I passed away. Okay. I can convert that policy into a permanent type of insurance, within the first 10 years of that 20-year term without going through underwriting. Now, why would I want to do that? Well, I go to the doctor, I get my colonoscopy, and he says, hey, we found something here. Hey, I might want to convert that term policy so that I know somebody's going to get something out of it. That'd be an example there. Okay. I have another policy that's a permanent insurance policy that, for me, I put extra money into it because I can borrow against it income tax-free for my retirement. I can also access the death benefit. That one happens to be $600,000 as well. at 2% a month if I needed it for assisted living, home care, long-term care. So that's $12,000 a month of somebody else's money that I'm going to use to pay that bill, right? That's what insurance is. I want to transfer that risk, and I'll let, some of the largest corporations on the planet worry about how long I'm going to live or how fast I'm going to die.
More and more retirees, Chris, going back to your first point there, I think are carrying a mortgage into their retirement transition or longer into their retirement timeline, correct? Are you
Oh,
seeing
yeah.
that?
Yeah, without a doubt. I look at, the house I grew up in with my parents. They lived there forever. House was paid for. I look at the house my wife and I live in. Well, it's 5 times as expensive as what my mom and dad had, and some of that is inflation. But I certainly live in a different area and that kind of thing. So that's very common. I think with some of the baby boom generation, they wanted to build a bigger house. And let's be honest, money was very cheap for a long time. So you could borrow and get a much bigger house at a very low interest rate. So that certainly, also helped precipitate housing price increases. So that's why many people do have mortgages in there. And that would be one useful tool for life insurance, is to line it up with that mortgage. And again, just in full and fair disclosure, there are people listening into the show today that probably don't need life insurance whatsoever, right? Not everybody needs all of, they paid off the mortgages. Now they have big 401ks. So just so we're not here saying everybody's got to go out and buy a policy here today by any stretch, guys.
But Chris, on day one of retirement, just kind of envisioning my future, I hope to have that lump sum, that 401k or retirement nest egg to support me into and throughout retirement. And I plan to spend it. In fact, I want the freedom to spend it confidently with my wife so that we can enjoy our retirement, enjoy the money that we've worked so hard for. But the life insurance in place, the way I am envisioning this, is going to give me the confidence to spend that, because if we spend it, then potentially it dwindles down over the course of retirement. And I want to spend confidently, but I'm only going to be able to do that if in the back of my mind, I understand I am giving her the ability to replenish the bucket if and when I pass away.
Yeah, absolutely. And, another common theme here is, somebody might have a monthly pension from their job. And they said, okay, well, we want more income earlier in retirement than later in retirement. So I don't want to leave 100% to my spouse, if I pass away, because, my family lived forever. So, down the road, she could live off of less money, that type of thing. And, that's where a term insurance policy would come into play. Look, if you're going to choose that option that is irreversible, and you say, all right, I'm going to get $3,000 a month. If I die, my wife will get $1,500. That'd be a 50% survivor benefit. You would certainly say, okay, well, for $1,500 a month difference, can I buy a term insurance policy? Oh, you sure as heck can, just in case you passed away in that first 5 to 10 years, basically, So again, that's just using a little bit of leverage here, transferring the risk, in case something unexpectedly happens, and it does every day. Read the paper, somebody killed in a car accident, or attended a presidential rally, for example.
Yeah, certainly. That's the reality of life. Short, we don't know, right? Chris, you mentioned several different reasons, different uses, and different types of life insurance that you yourself own and have on yourself. Why are there so many different types of insurance and different uses, different types of specifically life insurance? Could you actually just run through kind of a summary of maybe some of the different types and their uses or strengths or the important differences, I suppose?
Yeah, absolutely. That's why there's different types of mutual funds and different types of cars that we can buy. We all have a different use for it. Not everybody needs to drive in $100,000 SUV when, a used car gets them back and forth to work real easily. So term insurance, okay, is specifically set to cover a risk for a specific term. 10 years is typically the minimum you're going to find in a term insurance policy. Doesn't mean you can't cancel it earlier if you wanted to. Okay. 20-year term, 30-year term, that type of thing. So, that's the cheapest insurance because it's the least likely to ever pay out. Okay. So it's the cheapest, and that's a use it or lose it type of policy there. Okay. Then you morph into the more of the permanent type of insurance. And again, I'll stay at the 30,000 foot level because there's many different types of them as well. So, there is a whole life insurance policy that when we do a whole life policy, like we did on my wife when she was, I think, 56 or 57 years old, we wanted that policy that as long as she made the premium payment, guaranteed to be this same dollar amount until she was 120, there would be a death benefit, irregardless of the cash value in the policy, right? So it's a promise to pay out. The universal side of insurance is very popular again these days. Okay. It got a bad rap, a few years ago, because most agents did it the wrong way, but universal just gives you flexibility. Okay. I have 2 universal type policies that I can put money into. If I have more money, I can put even more into it. If I have a year where I don't have the extra dollars, I don't have to put it into, and the policy will adjust. The death benefit and whatnot can adjust. So, there is a lot of flexibility and different styles and ways that you can choose to use a life insurance policy. Do you want to use it, to have potential long-term care benefits as well, right? That's going to be a more permanent type insurance policy that's going to do that because, you're in it for the long haul. So is the insurance company. Right? It's hard to get long-term care benefits on a 10-year term policy because you're only going to have it for 10 years, right? And they're not going to give you an insurance policy if you're, unhealthy. So, these are things you want to do before you've had, a cancer diagnosis, even type 2 diabetes.
Sure.
So, some of those things that are debilitating or, can eventually have a terminal impact on you as well.
Going back to the term, Chris, you mentioned that most of them don't pay out because most people live through the term, but that is the cheapest way, the least expensive way to kind of provide maximum coverage and protection for that period of time. That's really the catastrophic, like worst case scenario, life insurance that is necessary for almost everybody younger. If they've got a spouse that depends on income, if they've got a mortgage, any debts, any children, that should probably be in place. And I know that a lot of people have insurance, health, life insurance through their employer, but you may also want some of that privately as well in case you change employers or something happens health wise. And then you get into those other forms that seem to have, I will say, extended benefits or duality in purpose or use, with the cash value, the tax benefits, the long-term care benefits that you discussed there. And I think that is kind of the important element as we look to specifically this transition to retirement time, where we might not have the mortgage or the kids or need to protect our spouse to replace income that we're no longer generating. That to me seems to be more aptly the type of insurance to have into and throughout the retirement timeline. Is that what you're seeing?
Yeah, I completely agree with you. I'm glad you brought up that group life insurance from your employers as well. That's typically very reasonable. You don't have the underwriting stuff, right? Open enrollment kind of like.
Yeah, but people think they've got that covered because they've got it through their work, and then they retire and all of a sudden they realize, oh, that's something that I didn't have covered, and now we've got to go out and shop for that at maybe a little older age when it's more expensive.
You're right, Peter. And if you think about it this way, from the mindset of an American consumer is, life insurance is an expense. They don't view it as an asset. Okay. So let's say you had I've got a $1.3 million term insurance policy I bought when I was, I bought it in 2006. So it's got 2 more years to go, 2026. Okay. I pay $1,100. And if I pass away, my wife will get 1.3 million. I got a term insurance policy when we built our new home. Okay. And I pay more for $600,000 than I did for 1.3 million because I got older, obviously, the cost of the insurance, the risk, and all of that. But like you say, if you're going to leave your employer, like many people do these days, not everybody stays at the job for 40 years. it's very important that you have something to cover you until you get a new job or, something along those lines, something you can convert. I like convertible term, right? So, look, let's get if I'm dealing with a 55-year-old, said, look, let's get a 20-year convertible term policy for right now. We can convert it into a more permanent insurance without the risk of underwriting. Okay. And so, I would rather be in control versus my health being in control, if you will. So some of these things you need to do ahead of time. And, we are all human. We think that, okay, I've got life insurance. I don't view my term insurance policy as a liability. It is an asset.
Mhm.
Okay.
Chris, there also seems to be a duality here where, yes, of course, we know that people who don't have the assets to pay off their mortgage, to get their kids raised otherwise, like have an absolute necessity for that life insurance protection in place. Like financial guru Dave Ramsey talks about the baby step process and getting out of debt and beginning to build wealth. But he even emphasizes the importance of having that term insurance before you even start making that financial progress. But then on the other side of the spectrum, many of the wealthiest people in the world, the wealthiest families in the world, utilize life insurance. And that difference seems to emphasize like the different types and the different uses, the different purposes for different kinds of life insurance.
Yeah, absolutely. Myself included in that. I'm not the wealthiest, obviously, but I have two policies that I put in excess cash into so that I can borrow against that income tax free. It is a tax tool, for example. Oh, yeah. And by the way, if I die, somebody gets an income tax free death benefit. Okay. If I go into a nursing home, I can access my death benefit early. Okay. But I can also, use that cash that's in my policy as retirement income if I want to as well. So if and I would argue the Dave Ramsey, Susie Orman, buy term and invest the difference, because I need more than other tools that are available out there. And I want to look at everything empirically, not just give a blanket statement to 330 million Americans that nobody needs permanent insurance. That's
Well,
ridiculous.
it's how the wealthy perpetuate their wealth and pass it generationally because of the tax efficiencies of how life insurance works. Passing that tax-free death benefit, helping to address estate tax levels for those that would fall into that category. So again, different times, different purposes, different types of insurance with different qualities, ladies and gentlemen. We're talking today about some of the protections that you can put in place for your financial well-being, for your money, for your family. Life insurance certainly is a big one. You need to know what type is best and most well-suited and most appropriate for you. That's part of the conversation. Again, Chris McIntire helps to put together a comprehensive game plan for retirement, a written plan that helps you address specifics with income, investments, taxes, healthcare, legacy, but insurance can be there underlying all of those to provide a necessary protection. So if you'd like to take a look at your plan, or if you have questions specifically about life insurance protections, pick up the phone, give a call, 800-868-1194. That's 800-868-1194. 800-868-1194. Chris, I started by saying most insurance is something we hope to never use. I think that utilized properly for legacy and estate value, life insurance is one that people know that they are going to use, hope to use in that form or fashion down the road, of course, at the end of the road, or before with those long-term care benefits you mentioned. Another form of insurance that we hope to use that is increasingly valuable among the American public is ensuring our income in retirement through the use of annuities. Studies have shown that the amounts being deposited into annuities, the amounts of annuities being purchased over the last 5 years has steadily grown each year, reaching or breaking record highs. And I think this is because the American public is more and more becoming aware of the value of annuities and the necessity that they fill in generating and guaranteeing retirement income, ensuring that retirement income throughout retirement, where most of us are missing the pension.
Yeah, the number one concern for today's retirees is outliving their money. Okay. And an annuity can you have a contractual guarantee with an insurance company to pay you for as long as you're alive. Okay. You know, Social Security is a form of an annuity. That's an immediate annuity. You've been funding into it. You don't have access to the cash value behind your, behind
Social
your Social
Security
Security. Yep,
deductions.
forgive me.
Yeah.
Forgive me there, folks. But today's annuities, you do have access to the cash value. So, we have a lot of clients that are going to get a lump sum pension, and we do a rollover into an annuity and structure their income out of that, because if they die, their kids get whatever's left in the annuity, where in the pension, a lot of times they do not, right? When the husband and wife both pass away, assuming there's a married couple we're dealing with, there might not be any residual income being paid out. We're on the, today's modern annuities that we use, fixed index annuities, those have the death benefit. So whatever's left gets paid out to the beneficiaries. But also you have the insurance that if you live a long time, there's a contractual guarantee. The insurance companies have the reserve dollars to continue to pay those income payments. Some of them have ways to increase the income as well, right, to help combat inflation, which many private pensions do not these days, right? You just, if you retire at 62, my father-in-law is a perfect example. He retired at age 49. He still gets the same income payment today. He is 95 that he was getting, when he was 49. So, bless his heart, but a cost of living adjustment would make a lot of difference in his life, where, in the private annuity landscape, he certainly could have found something there that gave him the ability to have an increasing income.
But there is an insurance available to protect and address that number one fear of retirees, Chris, of outliving our assets into and throughout retirement, in any other kind of account here. When we're talking brokerage accounts, investments, things in the market, things in the bank accounts, checking savings, we can draw an income from those, except that if the account balance dwindles down or reaches zero, that's it. You're out of assets, you're out of income. That's the end of the account. That is the fear that we have into and throughout retirement. Annuities specifically will continue paying us contractually guaranteed income for the remainder of our lifetime. And I think that is why Americans are finding the value in them once again.
Yeah, without question, Peter, and then, if you think of it, most folks listening to the show today are used to the 4% rule in retirement. So if you put in $1 million, you took out 4%, it's $40,000. Okay. Today's annuity payments, may be as high as, depending on how old you are, from 6 to 8% based on how old you are. Right. So if you had an annuity with a 7% payout and you needed, $40,000, you can do that with $600,000 contractually guaranteed for as long as your life, versus $1 million going by the rule of thumb of the investment world, because you have all the ups and downs there, no contractual guarantees. Now, which one of them frees up more money, using $1 million for 4% or, 600,000 paying out 7%? Do the math, folks. There's your condo in Fort Myers.
And that's an interesting statement and terminology that you use, frees up more money, because I think that the old connotation with annuities was that it locked away money, Chris. And you gave the example of Social Security, which is in fact a form of like government sponsored mandated annuity. Pensions from companies are annuities, and generally those meet that description, where the money was locked away and you could never access it. With today's modern private annuities, not only does the money that you deposit to the annuity remain within your estate, but just like you said, with the higher cash flows they offer, they actually would free up more available discretionary assets. A higher portion of your money could be dedicated to other things because of the payout that the private annuity is offering.
Yeah, absolutely. And I mean, it goes against everything that the anti-annuity world has to say. And listen, we do full scale investment wealth management under the fiduciary duty. So, but we just don't choose to have a bias just to have a bias. We want to look at things from, look, what is in the client's best interest, not somebody else's business model's best interest. And, that is having a structured guaranteed income from your Social Security, your pension, or maybe you use an annuity on your own to cover those basic living expenses and then have your investment portfolio for some of the extras in life. Just, generic example there, Peter.
Well, and the interest rates, the payout rates, the rates of potential for growth on these vehicles, and what they would pay you for income is at the highest level right now that we have seen in decades. So it's a good time to look at how to generate that retirement income from your retirement savings, investments, and nest egg, ladies and gentlemen. If you'd like to see what these guaranteed contractual lifetime income payments could mean for your retirement, pick up the phone, give Chris McIntire a call, 800-868-1194, 800-868-1194. He'll help you review and assess your retirement forecast and outlook and see when and how to generate the income, give you a roadmap for the proper order of operations for how to access things, being efficient from a tax standpoint, addressing the risks that you're taking, the fees that you're paying. That is your game plan for retirement. And Chris McIntire offers to put that together for you. No cost, no obligation. Just give a call now to get the process started. 800-868-1194. That's 800-868-1194. Finally, Chris, in the last couple minutes that we have here, long-term care is kind of the bull in the china shop, the 800-pound gorilla in the room. I don't think that there is a perfect solution to this out there available ever, but there are several ways that we can address it. And both the life insurance and the annuity component could play into that potentially. Can you talk about the modern way to address long-term care potential expenses?
Sure, Peter. And I would say there is a perfect solution. Let somebody else pay for it. Give them some pennies so that they pay your dollars. That's a perfect solution. So, many different ways. And let's be honest, the long-term care insurance policies of 15, 20 years ago, aren't what the new ones are today, right? The industry got a bad rap, probably deservedly so, because, I think they priced them wrong. So, people, the policyholders had to pay premium increases. I deal with it still on a monthly basis, where somebody's coming in with an old policy from, 25 years ago, and the premiums are continuing to increase, and some of that's hedging. The insurance company's got to pay their reserves and whatnot. The newer policies, when we attach them to like a life insurance policy, or it's a rider inside a life insurance policy, is certainly a cheaper way to do it, because the insurance company's is prepared to pay a lump sum death benefit out immediately, right? If somebody passed away. So, if they're taking that death benefit and paying it out over a 5-year period, if somebody went into a nursing home, for example, right, that's much cheaper for the insurance company than that big lump sum death benefit. So the industry itself has certainly adapted. There are some annuities that have long-term care provisions to them as well. There's life insurance policies with some wonderful long-term care provisions. I have 2 of them. My wife has 1. She cannot get insurance anymore because of a health diagnosis, or she would have more.
Well, again, we've been talking with Chris McIntire, president, founder of McIntire Retirement Services, Northwestern Ohio's resource for a common sense approach to planning and to get your game plan for retirement put together, ladies and gentlemen. As part of a comprehensive plan and in the planning process, there are many, many different tools and strategies available. Chris McIntire will help optimize your plan, the tools that you are using for maximum efficiency and confidence into and throughout retirement. You must have a plan to get your financial life in order and make the most progress possible. So give Chris McIntire a call for that game plan for retirement. McIntire Retirement Services helps savers and investors better determine your financial future and your outcome, ladies and gentlemen. So give them a call, 800-868-1194. That is 800-868-1194, 800-868-1194, or visit online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. Chris, informative conversation today. Always helpful to talk about the protections that we can put in place for the benefit of our financial well-being and the benefit of the confidence of the financial well-being of those that we care about.
Certainly, Peter. I'd love to share some personal stories on clients and some of our loved ones where we've helped and how expensive it was. So appreciate everybody listening today. Thank you.
Always a pleasure, Chris. Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.